everybody. My name is Advent, and today we're going to go over the trade recap for June 4th, 2024. As always, I am not a financial advisor, so anything that you see in this video or any of my videos are not financial advice. They are strictly for educational purposes. Trading does have its risks, so please do your research before you engage in the markets. Cool. Something before I go into the actual trades. Hold on, give me one sec. Somebody's trying to join in here. Cool. So before we go into the trades, I just want to go over something that I was talking to somebody offline just now. So he was paper trading NQ, and he got emotional and made some mistakes, which again, we're new to trading, so it's to be expected. As long as we're learning, that's all that matters. But one thing that I want to point out is something that he said. He said, if I go to Advent with $100 loss, he's going to kill me. One thing that is important that I will tell anybody that I worked with or anybody in general, whether you end red or green does not matter. I don't care if you ended red. I don't care if you ended green. All I care about is, did you follow your plan? Because whether you end green or not, that's not up to you. That's up to the market. Now, if you're making mistakes and you're not following your rules and you're oversizing or whatever it may be, revenge trading, then yes, that is something to look at. Because it doesn't matter if you end red or not. Did you follow your plan? Cool. That's all that matters. Did you execute when you said you would? Perfect. That's all that matters. After that, it's up to the market to decide if you make money or not. So whether you end red or not, I do not care at all. All I care about is if you follow your plan that you came up with. So with all that being said, today I took one Tesla trade, ended red myself, options wise, ended green for futures. So for options today on Tesla, this is Tesla on the 4-hour time frame. I took it gapped down, so we opened up at the short trigger, and then we came up and we triggered long on the long trigger. So I went long. I bought some calls. As we can see here, let me actually go on trading. No, I can stay here. So once it triggered long and became a 3-up, I bought calls. And then it immediately reversed, as we can see. Let me go on the lower time frame. Let's go on this was today. And then, yep. So it triggered long. I got in on this candle right here, on the second 5-minute candle. It triggered long for my level, and then immediately reversed and came back down and stopped me out. My stop was the bottom of the inside bar right here. So it stopped me out, and then again, it is what it is. It looks like it reversed after it stopped me out, and then kind of just chopped around, and then in the afternoon it came up and hit the first target, and then it just died off after that. Again, what we were talking about earlier, it doesn't matter if you ended red or not. You're gonna have red days. That's normal. The biggest thing is just following your plan, and when you do get emotional, is that you use the techniques, and you calm yourself down, because once you get into that tilt stage, it's really hard to get out of it. So in this case for today for Tesla, I got in when I said I would, and I got out when I said I would, and that's it. I did my job. It's not up to me if I make money or not. Yesterday was good. I got in, at the entry for long, and then it hit 2 targets, and then it came back down and reversed. I made money, not because, I willed it from, well, I guess I won't go into the manifesting stuff and things like that. Anyway, I got in when I said I would, and I took profit when I said I would, and I made money. Simple as that. It's the market, in this case for yesterday, did what it was supposed to do, or at least did what I wanted it to do. Today, even though I got it in the same setup, it didn't pan out the same way as yesterday. Again, it is what it is. Can't control that. So that's pretty much what I did for Tesla. Let me bring up my YM chart. I just have to take something off real quick. So for YM, I'm not going to go into the specific trades I took because I can't speak on them since I use fibs and I am sworn to secrecy. But what I do want to mention is, let's go here. Was it on YM? Hold on, let me check the time frames real quick. Was it on the 15-minute? There we go. All right, so for those who have been on these trade recaps for a while now, you've probably heard me talk about in the last one or two where I mentioned when we have a like a big red candle, then another big green candle, preferably I would want it to form like this second candle, be a little higher, so it's almost like a tweezer bottom. But generally, what I've seen is, let me actually go on trading view for this. And let's go to, yep. All right, I got that there. It's on the 1 hour. Extended hours are on. Cool. So the specific setup is every time we get like a move like this where we have a big red and then another big green that's almost the same size as the red bar. If you draw your fibs from the bottom to the high before it reversed, almost always, at least again from what I've seen and back testing, almost always it's going to retrace back to the 70 fib, bounce off perfectly off of it, and then head higher, as we can see from today on the 1 hour time frame. This is the first time that I noticed it on the 1 hour time frame, since I was always looking for it on the 5-minute time frame and the 15-minute. But I'm gonna start looking for this on the 1 hour too. So from what I've seen, this specific trade model, it's probably an ICT thing. For those who trade ICT, don't come at me. I don't know ICT stuff, so if this is an ICT thing, I don't want to hear, oh, that's an ICT model. Congratulations. Anyway, just something that I noticed. So for this specific setup, I've surmised that a 30-point stop loss is pretty good, and it gives at least 30 to 50 points minimum, and on the maximum side it'll give at least 100 points to the upside. In today's case, you got a real good move, 400 points to the peak. Or if you want to look at it this way, if you look at it from taking a step back, we have a big W here, and it completed W up there. And if you took the W entry, you would have entered in right there. So you would have went long there, your stop loss down here, and then your first target, center of the W, second target, completed W, either one of those levels. So with this specific model or trade model, we're getting in earlier. We're front running the W off the 70 fib. So instead of getting in here, we're getting in here. Again, for this specific setup, I probably wouldn't size in fully how I would for a W, just because we're front running the move. I'm anticipating the higher low. As opposed to the W, the higher low has been confirmed once it reverses back up. So I'm catching the higher low off the 70 fib. Does that make sense? Any questions? You can come off mute, type it in the chat, whatever you guys want. Oh, Sling mentioned, where do I draw the fib from? So I just saw the chat right now. So you're going to get the lowest point, which is going to be the bottom of this wick. And then we're going to take to the highest point before it reversed, which is this wick right here. So if you want to look at it like in the strat terms, the lowest point before it reversed, and then the highest point before it reversed. So this is the lowest point before it reversed back up right here on this 2 down, 2 up. And then right here, we have this 2 up, 2 down reversal. So from those levels. And then I have my fibs drawn there.
Got you. Thanks.
Yep. And chop, yeah, you know, strat-wise, chop, you could have entered on the hammer or, you know, this like little doji hammer looking candle right there. So generally with the W, I enter in right here on the 2 up or the 3 up. But using this fib model, I can get in here. So I'm pretty much catching the move almost in the very, very beginning. Let me know if that makes sense before I continue.
It makes sense, but how are you watching so many hours? Like, are you watching? This looks like a lot of hours.
Like the time frames that I'm looking at?
Yes, so if you're going to trade from the hour, then there's lots of hours in this trade. Are you watching more than 8 hours?
No, I'm not. So
What
all
is the
I...
plan? How are you doing this?
Sorry, go ahead.
No, that was it. I was saying, how are you doing this?
Gotcha. So basically what I do in the morning when I get on, I have my 2 minute, the 5 minute, and then, you know, I have my third screen with whatever option, probably Tesla or Nvidia on. And then before market opens, I get on like maybe an hour before, sometimes like 30 minutes before market opens. And then I'll just scan the time frames real quick on the 5 minute. So today, I go on the 5 minute, then I go on the 15 minute, look for the retracement setup. Then I go on the 30 minute, see if there's any there. And then I'll go on the 1 hour to see if any is there. And then that's basically what I do. And then I just wait. In this case for today, once I got on in the morning, I noticed that we had this pattern from yesterday on the 1 hour on YM. So I drew a fib and I'm like, all right, even though it already passed the entry, because you know, I'm getting on around 8:30 to 9. So I got in over here, or rather I got on the chart over here. I didn't get into this trade. I took other trades on YM. But I noticed when I saw it bounce here, I'm like, all right, let me draw my fib real quick. All right, boom, it off the 70. So I'm not watching for 8 hours. I'm just quickly scanning through the time frames and seeing if specific patterns have set up. And if this didn't form at that time, or like before I got on, and it was like coming down, I would have had a buy sitting there. But in this case, the setup already passed by the time I got on, so I wouldn't even have bothered getting in, because we're too late already to get into the trade.
All right, thank you.
Of course. But yeah, that's pretty much all for me on that side for what I took. Any trades you guys want to go over?
I didn't get into any trades today. What I was watching had inside candles, but I did learn yesterday. I got into the LVS play and GameStop. I saw that Sunday night. And so I set up automatic entry if it broke above its high of the day before, and it did. But by the time I was able to take a break at work and take a look at it, I lost all of that. So I learned if I'm going to do that, my success has been in setting up OCOs. If I know something, huge is going to happen, or at least I suspect it, I just set up entry and did not have parameters set there. So just big lesson learned if I'm going to be trying to trade while I'm working.
100%. When I used to work at my old job and I would trade, I learned the hard way to set alerts or set stop losses. Because, I'll get into the trade, a client comes in, and then, I have to pay attention to them. I can't be on my phone. And then I made that mistake a few times until I made it a hard rule that if I'm going to get into a trade while I was working, that it would need to have a stop loss. So always make sure there's a stop loss in place so we can avoid that. Because, we can get busy, we can forget, and then we come back and we think we're good, and then we're down 50%. And it's like, ooh, all right, that's annoying. Got to make that back now. Yeah. So we'll see. So yeah, as always, lesson learned. Thankfully, it's just money. It's not life or death. Anything else that you guys took or want me to go over?
Again, how do you recognize chop? Because I saw that the market was choppy, but I did not recognize it right away. But it made sense in hindsight because price wasn't moving earlier today. But is there a way to recognize it early on?
Whether you can notice it early on or not, I'm sure you can. At least I personally don't really know how, if I'm being transparent. The only way that I personally know to expect chop or not, as we know with the strat, we're going to do top-down analysis. So let's just go to the quarterly. Quarterly triggered, so I don't really care about that. As we can see here on Tesla, hold on, let me hide these drawings real quick. So with Tesla, last month was inside. This month is inside. So I go on the weekly now. This week we're still inside. So, there's potential chop. And as we can see with Tesla, let's go to the daily. The daily was inside as well today. Actually, it triggered down and then it went up, but then, kept on going down. So with these two time frames being inside, I can expect choppy movement. And even looking at the last few days, like on the 4 hour, Tesla's just been in this range. A bunch of threes, 3, 3, 3, 3, 3. Besides yesterday, Monday, so today, Friday, and last Thursday, I was right on Tesla. Because every time it triggered me on my entries, it stopped me out, both sides. So yesterday was the first green Tesla day in 2 days. And then today, back being red on it. So I can expect Tesla, because of the monthly and the weekly, to kind of just be choppy, as we can see here. It's kind of just stuck in this range. It's not really doing much. So from last week, I can expect it for the most part, because the monthly is still inside, that we can probably be choppy for a while, as we have been. Yeah, you get good days like today, like that day, it was a good day up. Yesterday on Monday, we just went straight up and then we came back down. But still, we're kind of in this range here, in this $15 range. And it's kind of just hanging out there. But generally for me, if I'm day trading, if the daily and the 4 hour is still inside, I'm going to be expecting chop. That's why I prefer to get in on the 4 hour, because at least one of the higher time frames, day trading wise, is directional. However, you still run the risk if the daily is inside. So I'll give you an example. Let's say, so as we can see here, you know, these two candles make 1 day candle. So this is 1 day. So if I get on the 2 down on the 4 hour, it can be risky because the daily is still inside of this range. So if I'm going to take that trade on the 4 hour, I'm just going to I'm going to use half my size because the daily trigger is too far away on the top and bottom. So I run the risk of getting chopped up. So if I took shorts here on the 4 hour off this short trigger, I still need to hit all the way down here to break the daily low. So I'm just going to use half size for this trade. Even though this day, you know, it went pretty well. It went here all the way down. At least $3 and change. But still, you know, generally, I would want to play a little safer. For example, let's use the next day as an example. So these two candles here is the daily range for Wednesday. So the 4 hour trigger, if I take it short, is going to be under this candle. That's the same trigger for the daily. So the daily and the 4 hour are triggering at the same time. So now I know not only is the 4 hour bearish, so is the daily. So in a trade like that, I would use full size. Does that make sense?
Yes.
Cool. So yeah, generally if there's an inside bar on the 4 hour daily or even just daily, you may be stuck in chop. If the 4 hour and the daily are inside, I don't even touch it. I leave it alone. The only times I would take a trade, which is very, very, very rare, I haven't done it in a while, is if I get like a reversal off of broader information. Otherwise, you know, the way I see it, if it's trading inside, it's just setting us up for a better trade tomorrow. So let's say, for example, GameStop. Whoever traded the afternoon got chopped up. Let me actually go back to the 4 hour. So we have this range here. So yeah, in the afternoon, it kind of just hung out in this range. It didn't really do much. But that's setting us up for a better move tomorrow. So now we have a 2-1 setup. So tomorrow it's either going to be a 2-1-2 down, and it's going to, you know, preferably we would aim for the previous candle low and then try to fill some of this gap. Or we can reverse to the upside and, you know, we can take out these highs. But again, you know, just got to wait and see what happens. So if there's an inside bar, don't ever feel like, oh man, I missed the trading day, so on and so forth. You know, it's all good. It's just setting us up for a better trade tomorrow. So you always want to look at it with that type of framework or frame of mind. Cool. Anything else y'all want to go over before we wrap up? Mike, you remember the trades you took today on NQ?
Yeah, sorry, I was dealing with my little brother. Believe it was the 1 hour, the one that I was at least proud of was the 1 hour at 2 o'clock.
2 o'clock.
I believe it was a 2-2 up, or no, it was the 3-1-2 up.
So right here, this 3-1-2 up.
Hold on.
Because if it was at 2, this is the
yeah,
2 candle, so they triggered 3-1-2 up here.
It was that one, yeah.
Yeah, that candle was massive.
Mm-hmm.
That's how much is that? Let's see. 100 points times 20, $2,000 per contract, assuming you held 100 points. I definitely wouldn't.
No, I didn't.
But strat wise, if you got in here, first target was 5 points and change. It's about $100. Second target is 16 points. That's about 300, 320, 350 bucks more or less, and then so on and so forth. But yeah, you know, solid trade. Pretty good.
Yeah, you know, I only comfortable with 3-1-2 ups or the 3-1-2 downs and the 2-1-2 ups, 2-1-2 downs.
Yep.
That's my type of trade.
Yeah, you just want to focus on those. You don't want to like take every single one. But yeah, that was a good one right there. Good stuff.
Appreciate it.
Yep. And then you had a Momo hammer that's set up right here on this one. This inside Momo hammer is a little big for my liking personally, but it's still a Momo hammer that I would accept.
What's a Momo hammer again?
A Momo hammer is a momentum hammer. So it's a hammer that prints in the direction of the trend. A better example, let me show you on NVIDIA. I think it was on the 4 hour. Yep, right here. So we have a 3-1 setup. Obviously we're bullish. And then you take this 2 up. So 3-1-2 up. It could be a 2-1-2. It doesn't really matter. But the Momo hammer is a hammer that prints after a big bar like this. So we have one there. We have one here that this one failed. It didn't head higher. It just reversed back down. But same thing. Big candle, hammer that prints inside bar, or it could be a 2-up hammer. Either one is fine. So generally,
So that means it's going to go up higher if you get a hammer after a big bar.
yep,
There's momentum for more.
correct. It's telling us that it's gonna head up even higher, like this one right here. We get a big move. I think there was another one that printed. So right here, big candle, hammer, move up. So it went 20 points, 19, 20 points. I usually,
So y'all,
when I used to look for these, those in like the 5 and 15 minute, but the 5, 15 minute, 1 hour, 4 hour, daily, it doesn't really matter. The higher the time frame, the stronger it is. Let's scan SPY real quick. This is the 4 hour, but let me see if we can find any intraday ones. So for SPY, we have a failed Momo hammer setup right here. Big candle, hammer, and then it failed. It triggered up, but just died back down right away. Let's see. I guess you can consider this one. So we have a big candle, hammer, and then it continues higher. Let's see if we can, this is the 5 minute, by the way. I'm just quickly scanning. I wouldn't really consider this one. It was more of a doji and then a continuation, but similar concept. This one failed, even though it did go higher, but it came down and then it went up. But this is just a TTO, a 5 minute TTO, as we can see there. Anything on the 15 minute?
do you use the strat any differently with futures?
Now the strat, the only setup that I use for the strat on futures is the W. Everything else is fibs. Because like I was mentioning earlier, yeah, I can't find any other ones, but in the playbook section, there's a Momo hammer image that I laid out there. So for YM, for example, why I prefer fibs. Also, shout out to Trust My Levels since he taught me how to use fibs. And he pretty much put me on to futures. Super grateful. So, like I mentioned earlier, I prefer using fibs and some ICT concepts for futures because, in my opinion, it's more efficient than the strat. The strat does work for futures, but again, I just personally prefer fibs because I can get in a lot earlier for specific setups. For example, you know, for this setup here, right? I'm getting in with the strat up here. So I'm getting in 48 points later. That's 240 bucks that I'm missing because I'm getting in later on the strat. Whereas with fibs, at this specific trade model, I'm getting in all the way down here. So I'm already up $240 just by getting in earlier. So that's why I personally prefer fibs for futures compared to the strat. The only setup that I use for futures, strat-wise, is the W, which is the 2 down, 2 up reversal, or the 3 up, whatever that may be.
Is there another setup you use the fib for with the futures? Like other than the W?
Besides this one? Well, yeah, so this specific one here, this is not necessary. I wouldn't call this the W. I would, again, I don't have the only name that I have to like separate the setups or the trade models, this would be more like of a tweezer bottom model, or I'll probably call like the tweezer model just to differentiate, because the W is very different. The W is, the W is create a low, retrace up, higher low, and we go 3 up or 2 up reversal to the upside. First target, censor the W. Second target, the W highs. However, for the tweezer model, I'm anticipating the higher low with the fib. So I'm getting in at the 70 to catch that a little earlier. So just to differentiate the two, I'll change the name. So the tweezer is just like an earlier entry into the W, because I'm anticipating that move. But I specifically need to see this candle pattern print a big red, big green. Otherwise, to me, it's not really valid. So actually, before I go to the W to show you how you can use fibs to enter. So the W, I'll show you how it came about. Let me just go really quickly. May 8th, QQQ, 5 minute, 9:35 a.m. Momo Hammer. Was that May 8th? This is the 10th. On the 8th. Yeah, so right here on QQQ, Momo Hammer. Granted, I would want the 4-hour and the daily and the 1 hour preferably to be in my favor when I'm looking for Momo Hammers. But it looks like this. Big bar, hammer, big bar. Thanks for that, Chop. So for the W, let's see. This might be a good example. It might be a little dirty, but. So for the W, when I first noticed it, again, for those who trade ICT, don't come at me. This is probably an order block in your language. Again, congratulations. I don't care. Let's just make money. So when I first saw this, I was getting in like this. I will draw my fib from the bottom to the high. And then if the middle of the W matched up with the 50 fib, I would get in on the retracement back down before it went higher. Let me see if I could find you guys a better example. Just go on NVIDIA on the 4-hour. So my preferred W is when it's a 3 up. as we can see here with NVIDIA. Low, retracement, higher low, 3 up. That's my preferred W. If it's a hammer and then a reversal, even better. So, man, let me see if I can actually find from my playbook when I wrote this, because I want to find like the perfect example to show you guys. Let's see, give me a sec. What day is this? 2/16/2024 for NVIDIA, or NQ rather, on the 5-minute time frame. Let's see if it lets me. It might not let me go that far back because I don't pay for TradingView anymore. This was in February. Yeah, it won't let me go that far back. Let's see if we can find another one in the meantime, which I'm sure we can. This is extended hours. This one might be a good one. Actually, that's the same one that I was just looking at. Is it? No, it's a different one. So what I used to do is every time I would see the W pan out, I would draw my fib from the low point to the first high point before it reversed, and then I will catch along at the 50 fib. So I would get in on the retracement and take it back up. However, another trader that was in Trust Group, he put me on. He's like, hey, I actually catch this move all the way down here. So I get in all the way earlier over here. And I'm like, oh, that makes a lot of sense, because we're just catching we're catching the reversal back in, like, you know, catching the reversal here and taking it up. And then we can get back in again over here if we want to. So he put me on to getting in earlier over here, where I was first getting in late over here. So now you have this entry that you can take. If you miss that entry, you can catch the reversal back down off the 50 fib. Preferably, I would want the 50 fib to be inside of this fair value gap that gets created in the center of the W. So in this area, I would prefer for a fair value gap or displacement to be created. And then if the 50 fib is inside of here, in the center of the W, I'm gonna take that, no questions asked. In this case, the 50 fib was a little lower. It's still near the center of the W, but it's not inside of the fair value gap where I would prefer it, but this is still valid. That's just me being picky. So now, since I've noticed this setup with the tweezer, you know, we can get in even earlier on the anticipation of the higher low. So as we can see here, we get on the 70 fib. For NQ, I'll probably use a 15 or 20 point stop loss, which will be like down here. And as we can see, filled us perfectly to the 70 fib and got in even earlier than the strat entry, and then heads higher. So we would have caught all of this from the 70 fib. 78 points. I would be done for like 3 days off that move on NQ if I took it. So now that I've seen this, now we can get in even earlier than before. So now there's 3 entries: the 70, the W, and then the retracement off the 50 fib. So you have 3 times you can enter this trade. Any questions?
No, I just need to paper trade it and figure out how to work with futures.
Definitely. And again, the strat works for futures. Chop is using the strat for futures. He prefers the higher time frames. It's just easier for him that way. I know people who use the lower ones as well, but again, just find out whatever works best for you. Cool. I'm going to stop recording now because don't want to give all the secrets out to YouTube people. I've given you guys enough. Even with these 3 entries that we just showed today, you could be profitable. This setup appears at least 2 to 3 times a week. All you have to do is wait for it to appear. So don't ever say that I don't love y'all. Anyway.
Real quick before you go, because I've only traded options, could you show me what the futures, like I know options has an option chain. What does the future purchase situation look like?
So it's like if you're just buying and selling stock. So if I go on YM, whoops, active trader, I'm just buying or I'm selling and that's it. There's nothing else to do.
Okay.
Another example, hold on, let me bring up my other monitor.
Can you use active trader from your phone?
On Thinkorswim?
Thinkorswim?
That's a great question. I'm not sure. I've only ever used it on desktop. I know you can when I used to paper trade on my phone for Thinkorswim for futures, I just bought and sold based on the chart. I don't think active trader's there for mobile. All right, so for example, when I'm trading futures, it's just buying and selling, and that's it. There's no contracts to choose. There are like monthly expiration contracts, yeah, but we're just buying and selling. We don't have to do anything else. We don't have to go into the options chain. We don't have to look for the expiration, choose the strike price, look for the premium that we want to buy. All we're doing is buying and selling, and that's it. So if I want to get in down here, boom, I place a buy order. If I want to get up here, a sell stop, whatever it may be, I'm just putting in the order, and that's it. If I want to sell limit, I sell limit. That's it. Nothing else for me to do. Super simple. And there's no theta, which is another plus. Yep, just buying and selling, easy peasy.
You run through this on a video, one of your futures videos?
For Tradeovate, or what specifically?
I don't know, Thinkorswim, I guess.
Like how to use it?
Oh, yes.
I'll post Trust's Thinkorswim video. I think there was a trade recap session that we went over Thinkorswim. Hold on, let me see if I can find it real quick. Because there was one we were going like in detail about orders and stuff, and then Doc put me on to like templates. Trade recaps.
Also, can I trade straight from trading from Thinkorswim? It seems like people don't trade from. They might use Thinkorswim, but they don't trade from Thinkorswim.
Oh yeah,
futures?
I wouldn't. I maybe trade like once a month or twice a month, if that, off Thinkorswim. Because look, the margin requirements are, Schwab is very, very, very conservative. For one YM contract, you need 14,000 or 13.3K for one contract.
I understand that.
On Tradeovate, it's $500. So,
Okay.
you know. What video was it? That's trade recap. Oh, there we go. I think it was this one. Yep, trade recap. Thinkorswim active trader. Yeah, we went over it on this one. It was the video from, when was this? I don't know. I'm just gonna put it in the group, in the futures section, and you can see it there. I posted it in the futures channel. But yeah, we spent like an hour going over like that Thinkorswim section. Cool. Any last thing before we wrap up? All right. Thanks for coming out, everybody. And as always, you know, keep on following your trade plan. Whether you make or lose money is not really up to us. That's up to the market. Just follow your plan and the money will follow from there. Other than that, I will see you guys on the internet and I will see you guys tomorrow morning. Thanks for stopping by.
Thank you.
Absolutely. Take care, y'all.